Here's the kicker. China's considering the nuclear option by selling US Treasuries, right? It's like they're holding this mighty weapon that could really shake up the market.
Wow, that's intense. What exactly triggers this idea? Is it mostly about tariffs or something deeper?
Yeah, well, it's tied to the tariffs and the ongoing trade tensions with Trump's policies. A guest recently mentioned, and by this I mean seriously deliberated upon, that China might use its massive holdings, around 760 billion in direct US bonds, and even more if you include those proxy holdings, to hit back hard.
Yep, that's a huge pile of assets.
Twist. If China unloads bonds, the yields would spike dramatically, meaning the US would have to, pay a lot more on its debt.
And that, in turn, would hurt not just the government, but also consumers and businesses across the board, right?
Precisely. As yields push up, borrowing costs for everything, mortgages, car loans, even corporate debt, would skyrocket. It could be disastrous, really destabilizing the market.
Really destabilizing. But isn't there a catch? I mean, if China burns its stash, wouldn't it also hurt their own economy?
Absolutely. And that's the counterbalance. China would, be self-sabotaging too, kind of like dumping a huge amount of shares and then watching their own portfolio crash. They could devalue their own reserves while trying to send a message, so it's like a double-edged sword.
Right, makes sense. And aren't we also talking about market instability at a global scale? How could that affect the US credit rating?
Spot on. Historical moments like in 2011 when the US was downgraded after political brinksmanship remind us that such actions could trigger, a domino effect. Increased yields, a potential downgrade, and even questions over the dollar's reserve currency status.
Yeah, that's a serious ripple effect. It really underlines how interconnected these financial moves are, right? Also, it ties to China's broader strategy of shifting away from the US dollar and into other currencies and gold.
Exactly. It's a strategic pivot. While they're still holding a significant chunk of US bond debt, their long-term goal is diversification. So, while a sale might be a tactical move to deter US policies, it also accelerates their shift away from the dollar.
It almost sounds like a high-stakes chess match. Each move or counter-move has massive consequences.
Totally. And the key takeaway? A bond sell-off controlled by China could lead to spiking yields, more expensive borrowing, global market volatility, and even potentially a credit downgrade. But remember, such a move is a double-edged sword. It hurts both sides, which might ultimately force China to tread carefully.